guys, no camera today. I'm just too sick. So rather than dealing with the rags to riches stuff, hopefully I sound okay. By the way, I can't really hear myself. Just now getting my voice back. Um, so I want to just kind of make a video here to describe a strategy that I'm using for the speculation side when I get into that, and what I've been trying to help members use over the past past 2 weeks or so. So basically, it's just a StocksBuddy tutorial. So what I've done here on SPX, which is the highest risk index you can possibly trade, just to demonstrate that it works and that it's okay to have losses every now and then, I'm just going to show you guys kind of the rules that I like to follow. So the first rule is that I want to use more than one time frame. Ideally, we'd have like the weekly and the 4-hour, the daily and the 2-hour or 1-hour, 15-minute, 2-minute. It really depends on what type of time frames are well respected and clean. And you really just want to kind of use the higher one as a filter to tell you when it's not time to trade against that direction. So in the case of SPX, SPY, all the riskier stuff, I typically like to do the 15-minute and the 2-minute. And we used it also on the low float runners for the day, and I've been doing that quite a bit. And I'm going to do it again tomorrow morning on my live stream. And this episode, by the way, is much less to do with rags to riches, so it won't be part of the series playlist. So what I like to do is on the 15-minute, all I've done is plotted StocksBuddy, and I have it on intermediate, but you can use it on any sensitivity setting. I just prefer intermediate and beginner. And basically all I did is I've just drawn a vertical line every time there's been a signal. So in this case, a bear line, a bear signal indicates a red line. I have one here, I have one here, and then for the green, the bull signals, I've just drawn green vertical lines just so we can identify. This one's off kilter for some reason. Not sure what happened there. I think it's because I had the other situation pulled up. But anyway, the proof of concept is the same, so we can omit that one. And the idea is that once it's entered a bearish or bullish state on the higher time frame, we want to use the lower time frame then for trades in that direction. So in this case, at this point in time, the line turned green, so we got a bull signal on the 15-minute time frame. So on the lower time frame, we're just going to look for signals that go up in the bullish direction, and when it turns bearish, we're just going to look for trades in the bearish direction. So this is known as multi-time frame confluence. So it's a form of it. So what I'm going to do is I'm going to look at the 2-minute now. And you can see a little bit closer here is that this is in a bearish state at this point. The line persists across time frames. So I'm not drawing a line for every 2-minute bear signal here. This is just to identify the actual entries. And what I'm doing on the 2-minute time frame here is I'm going to look for the the bear signal in this case to close, and then I'm entering immediately on the close of that candle to open to the next candle. Okay. And then I'm setting a 1 to 1.5 risk reward, just automatic. And then if I get a condition where there's 5 or more candles that have higher highs or higher lows in the direction that I want, then I'll move my stop loss up below the low of each candle if it's greater than that 1 to 1.5. Otherwise, I'll just lock the profits there and move on. So in this case, you can see we had the stop loss was here at the time. We had a signal here on this candle. We entered on this candle. The stop loss was placed here immediately, and then a 1 to 1.5 risk reward target was placed right here. In this case, it was a stop out. That's okay. It was a $4 loss, 0.08%. And then we got another bear signal here. As soon as this closed, we entered here on the open of the next candle, placed a stop loss right here, which is where the stop loss would have been. And then a 1 to 1.5 risk reward target was placed here for a profit of 739 or 0.15%. So the end result here, in theory, should be that we're net positive overall. And one of the important things to consider here with SPX specifically is that if you're trading this, you can't just look at the chart. You have to really also factor in the premium differences, because a lot of people trade the contracts on these. So if you're trading 0 days and the price goes sideways, even if it hits target or if it doesn't hit target, chances are that contract is going to have a much wider value. I just plotted the price action ones to kind of show you the relative strength and weaknesses. So, and by that I mean strength of the profits, weaknesses of the stop loss, because the goal isn't to be right all the time. Risks are going to happen, losses are going to happen. Our job is to control them to the best of our abilities. So what I'll do here is I'll just start the replay at the most recent bear signal just before it, and then we'll just kind of go in, and you can see that the positions are already drawn. So I'm just going to start this playing at 3x just so you guys can see it. So right here we're in a bearish state officially because this red line exists. So now I'm going to look for the next bearish signal and see where it goes. So in this case we got a bear signal here. We entered on the next candle, and it was a profit based on stop loss being here, 1 to 1.5 target being here. So now we're going to look for the next bear signal to close. We got a close here, entered on the next candle, stop loss goes up here, take profit goes here. This was a loss. And I'm just going to speed this up a little bit. By a little bit, I mean it's going to speed up pretty fast. And I'm just repeating those processes for all these trades. You can see this is a win, this is a win, this is a win. The next day happens, so we don't hold trades into the next day on SPX. That's a profit. That's a loss. That's a profit, that's a profit, that's a profit. That's a loss. So now we're in a bearish state, so that's a profit, 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 and then the next day happens. Still in a bearish state, so loss, loss. Now we're in a bullish state. Profit, loss. Now we're in a bearish state. That's a loss. That's a profit, that's a profit. That's a loss, that's a loss. Now we're in a bullish state, that's a profit, and we're done. So I'm going to turn this replay off. So you can see there's a good mix of wins and losses, and that's okay. So if we add up the numbers on these, on January 23rd, the first day, there were 6 total trades. We went bearish at 10:30 a.m. Eastern, bullish at 12:44 Eastern. We had a total of 4 wins, 2 losses. Total price range and profit of $17.09. Total loss price range is $4.36. Net profitable at $12.73 worth of price range. But again, you have to factor in the options variances like IV and theta and things like that. So just kind of keep that in mind. And then for the 24th, so Wednesday, we had 11 trade opportunities. So if we took one of each, sorry, we had a total of 8 wins, 3 losses. So again, just by going in the direction of the trend, we're pretty safe in most cases. $53.06 of profit range and $7.30 of loss range. And that includes both directions. That's just the profits versus losses for a net positive 45.76. And then on the 25th, so today, there were another 11 opportunities, and again, you can filter out things by not trading the first half hour. You could trade not trade the last half hour, and so on and so forth. It's up to you. Net profit territory was 26.90 across 4 wins. We had 7 losses and lost a total of 28.12. So still, the net P&L was down $1.22. So if I add these up, just for these 3 days, I do 12.73 plus 45.76 minus 122. The total profit range for this 3-day period, just using StocksBuddy and not doing options or anything like that, was plus $57.27, which is kind of bonkers. Let me make that a little bit bigger too, so everyone can see it on the recording. I keep forgetting I'm recording these, so I'll zoom in. This is the 24th. I'm sorry. This is the 23rd right here. If anyone wants to pause and review those, this is the 24th, so Wednesday, and then this is today. So today we're actually at a net loss. And of course, the overall for the 3-day period was positive by a pretty significant amount. So that shows you the kind of potential of this sort of strategy. And this video isn't made as a product pitch or anything like that, but I'm just showing you the emphasis of trading in the direction of the trend rather than trying to fight against it, waiting for confirmations, using predefined risk, predefined targets, and respecting them, and then not compromising on your plan. Like this one here, realistically, for example, if we're using the 5 candle rule, so if we get 5 or more candles in the direction of the trade that have, in this case, lower highs per candle, we could have 1, 2, 3, 4, 5. And if I zoom in, I'll just show you what I'm looking at. I'm looking at the highs of these candles here, the tops of these wicks. 1, 2, 3, 4, 5. Therefore, this is a technical bearish impulse, which means I can use the high of each previous candle as a stop loss for when I take my profits. So this profit should be bigger down to here, because this candle right here is the first one that breaks over the high of the previous candle. So this one should be bigger, but I really don't care about that for the sake of this review. I just kind of wanted to show you guys that. But again, this isn't a product pitch. I just want to show you guys the importance of having a system, a mechanical system that takes the guesswork out of the mix and being able to trust it. So you're going to have losses, and really it's not how many wins you get, it's how gracefully you can handle your losses that makes you a successful trader. So sorry for, again, the way I sound in this video, but hopefully this helps you guys understand, that if what you're currently trying to do isn't working, there are alternatives, and it doesn't have to be super complicated. even if you don't like this indicator, you can do this with other indicators, and it's the same concept. You're just going with the trend instead of trying to fight it. It keeps you from trying to anticipate stuff, and more importantly, it shows you where to cut your losses when it's appropriate. So I'm going to end this recording here. I know that I got to get back to the rags to riches stuff on this channel, and I really, really, really want to get into the diversification by yield stuff, which I've promised the team members I'll make a video on. I just want to make sure I'm feeling a little bit better before I do that, because I need that to sound a little better. So everyone have a good day, and I'll see you guys tomorrow morning at market open if you're in the Discord.